Today we'll be moving on to chapter 2 where I'll be teaching supply and demand. Now look, I don't want you lot to get confused. Now when I was teaching you lot order blocks, remember when I said essentially order blocks are simply areas of supply and demand? Now, what I'll be teaching you in this lesson is the two types of supply and demand zones. So we have a continuation zone and we have reversal zones, right? Reversal zones are essentially order blocks. Okay, but let's get straight into it and I hope it all makes sense. So, lesson 1, the traditional approach to trading supply and demand. What is supply and demand? Now, when explaining a new term, I always start with a simple definition. Supply equals sell, demand equals buy. Now, of course, it isn't as simple as that, but it's a general idea. An area with increased supply refers to an area with increased selling pressure, whereas an area with increased demand refers to an area with increased buying pressure. Alright, so keywords I want you guys to be familiar with. When I say the word rally, I'm literally all it means is buyers are exceeding the sellers. When I say base, that means sellers and buyers are equal to each other. And when I say drop, that means sellers are exceeding the buyers. Now, this is what I want you lot to pay attention to and understand, yeah? So, the two types of zones. Supply and demand zones are divided into two types. Before we go any further, let's talk about the two kinds of supply and demand zones. Although supply and demand zones are the same thing, they are divided into two categories depending on whether they form as a result of a reversal or as a result of a continuation. So, the following are the two types. Continuation zones are examples of rally base rallies and drop base drop. Now don't worry, I'll be going through live examples of these. And number 2, the second type, reversal zones. Rally, base drop, and drop, base rallies. Okay, now essentially when I go through these examples, you guys will already start to click on because these are literally examples of order blocks. These will be examples of continuation supply and demand zones. Okay, now if you lot pay attention to a continuation zone, yeah, these types of zones form when price moves in one direction, consolidates, and then continues in that same direction. So if you pay attention here, we can see a rally, yeah? Buyers are in power. And then we see a little pause in the market, a little consolidation, right? And then a rally to continue the move over to the upside. Now that pause, that area of consolidation creates an area of demand, right? So when price pushes up from there and starts to pull back into this area, that means it would have mitigated an area of demand where we would look to then enter to continue the move over to the upside. That is why it's called a continuation zone, right? Because essentially all it is price is continuing over to the upside. And that's the same for the selling example. We have a drop and then we have a base, a pause, a consolidation, and then price continues to drop. Now that marks out an area of supply. And now remember I said supply equals sell, demand equals buy. So rally base rally, when price pulls back into this area, we know that this is a demand. And what does demand equal? Buy. So we look to buy off demand. Here we have a drop base drop. Now when we mark out an area of supply, what does that mean? Sell, right? So when price pulls back into this area of supply, we would look to then sell. Now look at these examples here. So one, we had that break of structure, right? Price broke through this high, creating a higher high. Price then starts to pull back. And what do we have here? A rally, a base, and then a rally. Price pulls back into this demand zone and then continues to move over to the upside. Okay, this is another example. We have a drop and then we have a base, right? And then pay attention here. What's all of this? Imbalance, right? Not only do we have imbalance, we have a base which marks out an area of supply, right? So now that price created that area of supply, left us that imbalance, we can now anticipate that when price pulls back, number one, it will fill in this imbalance and then mitigate that supply zone to then continue the move over to the downside. Now I hope that was fairly straightforward. Move on to reversal zones. I'm going to be showing you guys quick examples. So first things first, quickly, I'm going to go through AN. Now, if you lot go back onto the mentals charts, I actually sent this setup. So that's exactly the setup I'll be explaining to you guys now. So first things first is I identified these equal highs, right? Now what happened here? Price took out that liquidity, right? So we now know this liquidity has been taken out. But what do we realize happened right after price took out that liquidity? It shot back down. And what did it do? Break structure. Right, now if I zoom into that structure over here, we can anticipate that price is creating higher lows, right? But then what happened at this point over here? Price failed to maintain its upside presence and it actually broke below that low, right? So we identify this as a minor break of structure, right? So once I got that minor break of structure, right, I started to look for potential areas where I can sell off from. Now, what can we identify here, right? One, we can identify that this is imbalance, right? So we know price has to pull back to fill in that imbalance. But right before this imbalance, what can we see? This nice drop, base, drop, right? And it's much clearer on the 30-minute. So we can anticipate a drop and then a base and then a drop which created imbalance. So price must pull back to fill in that imbalance and it will mitigate off of this very nice supply zone, right? Now that is where I took my initial entry off. Now if I go back onto the mental section and actually find this out for you guys real quick, UDNZD right here, right? So remember, equal highs got taken out, price then broke that minor structure, pulls back into that supply, right? So if I go back onto the charts, that was the supply. Now look what happened. Boom, price taps into that supply and it begins to sell off. Okay, now in terms of setting the TP, we can head over to that 4-hour and look for an area to target. A nice area in my opinion would be this level here. Let's go to that 1 hour, see if we can find better TP. Right, so we can see there's all of this imbalance, right? So we'll target that. Okay, now let's go back to where price was and let price play out. Boom, we got that further break of structure, correct? Now once we got that break of structure again, let's play price a bit. Not only did we get a break of structure, but what did price leave right here? What is this? Equal lows, right? That is all liquidity in the market, right? So we now know price must continue to move over to the upside to take out those equal lows. Now, what can we identify at this area over here? A very nice supply zone, right? So one, we had that break of structure. Two, we had that liquidity. Price pulls back into this supply and then continues the move over to the downside. Now we've got that additional break of structure. But what did price create? What is all of that? Imbalance, right? We now know price has to come back to fill in that imbalance and mitigate off that last area of supply. Right, so all of these would be areas to re-enter on. That would have been your second entry right over here. Oh. Right, and we'll be looking to enter again of that supply right over here. Boom. And then price continues to move over to the downside. Now, once we got that additional break of structure, once we got that break of structure and price reacted, what did it do? Create equal lows again, right? So we can see, look, price is simply creating liquidity so it can seek it and take it out, right? Now this pullback, how could we go in a re-entry? Break down to the lower time frame. Now once we break down to that lower time frame, what can we identify? A drop, a base, and a drop, right? Now before this drop, what can we identify right over here? Another area of supply. Now that would have been another entry point. Alright, head over back to that 1 hour. Move all those TPs down here. And now we let price play out. And that's it. That's current price right now. And I'll still be holding this position, hopefully to target this area over here. And yeah, this is all examples of continuation zones. Now I'm going to move over to reversal zones. Reversal zones. Reversal zones is the same concept as trading order blocks. It literally forms when price reverses direction, then sets off a new swing. So if I go back to that slide, remember I was talking about the examples of reversal zones: rally, base drops, and drop, base rallies. Now look at this example here. We have a rally, right? Then we have a base. But then price doesn't create another rally. It creates a drop, right? And that drop broke structure. Now that would be a reversal, right? That's why we call them reversal zones. So now that we got that break of structure and we have that imbalance, right? Probably expect price to pull back, fill in any imbalance, and mitigate that last area of supply. And now this is why I say it's the same concept as trading order blocks. Because look, trading order blocks, you have that last buy to then sell, which breaks structure, right? Price pulls back to mitigate that order block to then continue. Is the same exact thing, right? Same thing here. We have a drop, we have a base, we have a rally. Price breaks that structure, pulls back into that area of demand, and continues to move over to the upside. Now this is an example here. We have a rally, we have a base, right? And then we have a drop. Price pulls back to fill in this imbalance, mitigate this base, to then continue over to the downside. Another example here. We have a drop, we have a base, we have a rally. Price then pulls back, fills in this imbalance, mitigates that demand, and then moves over to the upside. Now, these zones form when one major swing changes to the other. I don't know why it says usually, but it is formed when banks are buying or selling large quantities of the currency. Now, one thing I want to point out is that reversal zones are seen to be the most profitable out of these two types. Now, I'm going to quickly show you guys example before continuing over to the next lesson. Now, GU. Let's look at the bigger picture, right? Let's replay price here. What can we identify already right over here? All of this imbalance, right? So there is imbalance down here that still needs to be filled, right? Cool. Now, what can we identify at this point over here? So price is creating higher highs, right, and higher lows. Now, what can we identify happened right over here? Price broke structure, right? That was that last low, correct? Price broke that structure. And what do we have here? All of that imbalance, right? Now, once we identified that break of structure and we identified this imbalance down there, we now know price must come back to fill in this imbalance up here. Look, we have all of this imbalance. Sorry, we have this imbalance right here, right? That imbalance is now filled. And what can we identify? Right here, an area of supply. We have a rally, we have a base, we have a drop which broke structure, right? So this right here would be our area of supply. So we would have sold off at this point here. We would have sold off at this point here with our stop loss at the wick, and we'll be targeting that imbalance I was talking about down here. So now if we just zoom out and play price. Price moving over to the downside. There we go. And we hit our take profit. Price filled in that imbalance down here, mitigated our area of supply, filled in this imbalance, and then continued to move over to the downside. And we secured a nice 1 to 14.5. Now let me show you guys one more example. EU, perfect example right here. Price creating higher highs, price creating higher lows, right? I've showed you guys this example before. Price creating higher lows. What did we get here? That break of structure. Now when we zoom into price, what can we see? Rally, a base, and then a drop. Now what did that drop do? Break structure. Once we identified that break of structure, we then mark out our base, this whole area here, right? Now, since I've already taught you guys order blocks, which order block would we go off of? That last buy candle before the sell, right? There we go. We would have sold off at this point over here. And we would have targeted that low. Alright. Now that's entry number 1. Entry number 2. So where's our entry number 2? Let's see. So once we got that break of structure right over here, what can we identify right up there? So we can identify a rally, a base, and a drop which broke structure. And this candle here was the last candle before that sell-off. Price comes to mitigate and continue to move over to the downside. And as you can see, price sold off completely. So I hope reversal zones was quite straightforward. If you guys have any further questions, feel free to message me whenever you'd like. And I'm going to continue over to the next lesson.